All right, good morning. Hello, good morning. There is not much time to just go through the intro video and have some fun with the kiddies. Where are we? It's going with the VWAP, and here is another day with demo and trial of the Strategy VWAP Plus M5 Strat. This probably would be the last week of trial and the first week of demo. If you recall, I hope you do. You can go back the beginning of the video of the 14th. I mentioned oh, sorry. On the beginning of the video of the 14th of the January, I mentioned that this gap is too big for SPY and it's not sustainable, and market gonna be bullish for the most part, and but there are gonna be lots of big gap downs and lots of bearish moves. And voila, as you can see that what happened today, market could go down, and it is going down, especially that we are breaching a critical bounce point at 50. It would be at 56.65, lower $2 lower than where we are now, and it would conclude today's a bit more of today's ATR on SPY, but I'm not so sure that if market has it in it to go that low. But fundamentally, and by fundamentals, market can go, and if you have traded enough in the market, anything is possible. So we are day traders, we are not investors at this time. Traders, day traders, this is the equilibrium point between traders, day traders, and swing traders and investors. But if market starts to go lower, then the day traders, what the hell happening to me, would be those that they will have a winning point because the stock's going to lose value. Investors had to sell off, and then day traders can play each side of the trade. So as every day, I'm again supporting. I'm not a sponsor. This video is not sponsored. There is no financial benefit for either party of this. I'm just in love with the project Run Strat, and for those that they are looking for stocks to trade and know how to find stocks, the website runstrat.com must be a place to go to find stocks to trade. This website provides top-notch information for finding setups, and it provides some whole bunch of awesome tags that you can find that without looking at the chart. You see this? Look at the Billy on month is continuously down. Both monthly candles for the current and previous month are red, and they are lower low. They have lower lows. On weekly, we are both red candle but in sidebar. But on daily, yesterday was daily down bearish candle. Today is in sidebar, but it is green. Look what we see here. So here's what we have here. It's just simply without looking any chart, you can read what and how charts look like. This is how you don't need a chart to execute a trade. You can just basically see what's going on. And if I just look for PMGs with plus 5 million, 8 million is good. There are no stocks with 8 million. Let's see if 5 million. Let's see if 3 million. Oh, don't tell me that. Okay, IP, what does it mean? For last at least 3 sessions, these stocks have had higher highs. All right, at least 3 sessions, it have had higher highs and lower and higher lows. So you can say all of these lows are higher than each other. So this provides a condition called PMG, or pivot machine gun, which in this condition, hold on, let me do some funky stuff. Which in this condition, in this condition, when this thing happens, this candle or the next one or any other one can go berserk and starts to do this, starts to wherever we want to think of. And then look at this, this bottom line is the price. It can go like that, oops, that, and or even that. But here, so every tat that I'm making, every noise that I'm making, is we are taking a lower lows. Price tends to take the next low or high in case of break of current high or low. Market has that tendency. That's how trends continue to go, right? So here you can see, look how many do we have? But here we have a one lower low. But here continues, then we have one. Market is still pushing higher, This is a clear investing chart that it can just keep going and going and going, and you have higher highs. If you switch to monthly, here we cannot see monthly. Let's go to, what's that, IP. Let's switch back to our chart. We go to monthly. Look at monthly. Here, so this stock shows a trend. Look at that. It's for how many months we have been going like higher, and for how many months keep going down. I mean, I'm not sure who gonna keep short this long with all of the fees that you have to pay, but I mean, I'm looking at the stuff based on the day trading scenarios, and here you have maybe a bounce off of this drop, or maybe a change of the a total change of the trend. We never know unless it's done. We never know, and it's not a magic. It's just, we all know that unless it is done, we never know. We still have room to go up to this. This is just basically simply as technical analysis. So with any further ado, let's get into it. Okay, so here is not the one that I want to look at. I wanted to look at this. I wanted to look at JD, tight hammer, and POC. It is a very critical point that we have on JD. It can go either way, but we are looking at, look at this. Is today Tuesday? Yeah, after a long weekend, let's see what we are getting out of market. So market opens. It was a good long. So how it was a good long? Look at this. Market goes up, keeps hugging the VWAP, but there's a split here. This is also accepted. There's a split here. There's a touch. We go in with the here we go in with we go in up here with the idea of the break candles low. So this candle has the break, right? So we go in as in a long candle with $1 stop, all right, with $1.15 stop, and let's see what we have gone already out of it. $2.10. And if you want to be more optimistic and have a little softer hand, I don't know if that one is the word. If you want to have a little bit more flexibility toward the price action, you can use this one. If you go by 15 minutes, you still can be flexible with these two hammers up here. But look at this. After 1 hour, which happens right about here, 10 cents and break even, and then we just play strat. So obviously right up here is the maximum gain that we have. We could gain more. There was more possibility to gain more, but that's what we got the most out of this trend. It's actually exactly let me see, yeah, we got 1 or full hour out of this thing, or we could just let it just go hit 2 hour in 5-10 more minutes, but this is a little bit risky, although it happens. Normally when you set this, after a huge candle, better to just let the price play in the long candle, because then they're gonna be value to be found. So here we are in the value area, so whatever value that market wanted to set here, it was not accepted by buyers, so market moved higher, and now we are in this area of value. We'll see if this if this high breaks, HOD breaks, market's gonna look for higher price. So basically what we have on daily, look at here. So here we have a mother bar. We got a bounce out of it, but we came back in. We played inside. It broke to the downside, but it was not accepted, and we got back inside. So this is the mother bar value. I call this value bar. Price wants to stay in, so we got 1 wick out of it. We could go for another one. Here, what we have a 2-1 bearish, 2-1-2. Oh, I forgot to. Oh, again. Let me change my headphone. So there is this incompatibility going on, and when I share my screen or Discord, I lose okay, forgot to post this, but I did now. All right, so this is how things are. 2-1, if it takes it this side, 2-1-2 bearish continuation. If it takes it the other side, 2-1-2 bullish reversal. So here what we have a 2-1-2 bearish, but market came back in. Sarah has a 50% rule. It's a general rule for everyone that trades. You can take it, you can consider it anyone's, but Sarah was the one that introduced it to the Strat community. It has been there for a while, but we call it Sarah's 50% rule, or SSS 50%. It says that if market gets the 50% higher, gets higher than 50% of previous bar, there is way more tendency and possibility to that it goes to the other side. It takes the other side of the candle. All right, so that's how you get a 3. That's a rule considered in the Strat actually. So when you see that, let me set a Fibonacci. If you consider this, okay, if you consider this, oh, I don't want to see any of this. Okay, so once once that it reaches this level, you are open to the other side. So that's how you set your stop and just sit on your hand. So what happened here? Price simply, oh my god, look at 1 cent, then take 2 hour out. 1 cent. This is normally, however, I just cut it when it pulls back heavy after a failed attempt. I just cut it. So here's what happened. Look, it was there was a break, market came down. This is yesterday's low, right? We open lower. That's how we have 212 down, but market didn't want to stay down there, right? So what happened? Instead, market started to rally up, do a pullback, touch VWAP, and voila, let's go. So normally as I'm a little bit aggressive with my strategy, which I don't suggest you as the new ones be, I go in down here half hour, okay, and I set my stop down here, right? So if it breaks the following, if it breaks the candle, I'm out, and I'm not going to consider that one as a long. But if it goes back, once it breaks to the other side, I will add at least 1 hour, okay? So I will be 1 hour and a half, or even 2 hour. All right, so I will be still around here, not even on top. I'll be around here with the stop down here. I will have a very good average, and then I let it ride. All right, then I will let it ride. Let's see what's going on here in the chat room. Okay, so this would happen, and then I would add, and then it would run up to the upside, and then let's see with the aggressive approach what would be this is the out 78 cents, and we get 180, we get even to $192, 3 hour would be like here. We can get almost 3 hour out of it, but 114, sorry, down here would be 2 hour for us. It went up to 3 hour, but it would be up here, down here would be our takeout. So with the 78 cents, 256 shares, it will be $400 trade for us today with this setup. So I'm spending so much time on one because it's about quality, not quantity. You get 2 good setups a day. You don't need anything else. So again, this is what we have. Look at this 212 down to the downside, but market gaps down. Market doesn't drop down. It opens, it drops for like voila 30 cents, 30 cents, drops 30 cents, and then pulls back up to the upside. And this is how it is. It opens, it keeps hugging the VWAP until there's a touch. There is a touch, and the bounce back up on the touch, which is this candle we can buy. You can see that what happens here. This is a touch, right? This is the candle that, where is it? This is the candle of the touch. We can go in here, like this is the candle that we can open on, buy on top, or simply you can buy it on the pull back in, because when it drops but pulls back in and goes above previous candle, it means it is a continuation candle to the other side. It successfully took it to the other side. This is at least what I understand. Look here, market open here, right? Like market open here. Let me see if I'm showing properly. Market open here. All right, sorry, this candle open here. It pulled back down, but it pulled back up again and took to the other, went for the other side, right? So it means a continuation candle. And what do you see after that? What do you see after that? Here, even here, after it took the other side, getting in open to the open of this candle, going on, you still have like around 40 cents, 45 cents, 45 cents off of the 30-cent stop. Just one move on the same candle. So here you go in with the stop down here, and then you let it ride. Where you go in normally when it takes the other side of the other candle, which would be a stop of you can 16-cent stop. Okay, it's a 16-cent stop, 17-cent stop, and then the first stop would be 45 cents, 47 cents. So considering spread would be 2 cents, you are expecting 3-hour move. Okay, here we go 64, then you go back to 47. It's 1 hour right here. So we lose 1 hour, but we take 3 hours out of this trade. So this is another one, and what a day, what a day. DWAC I'm not going to even look at. BA, all right, it kept hugging, and then this is the first touch going in with the open of this candle with a stop of 93 cents, and instantly we have $1.34. We can take a minimum 1 hour out of this thing. So then it comes back down and starts to play stupid around the chart. So even for the second shot, if you consider this, this would be the candle of the retouch, sorry. Then it would be a pullback. One interesting point: it is always good that you have a little penetration into the VWAP and then pull back up or pull back down. A little penetration, but not the full break. Penetrations are good because they show that market doesn't have enough juice to go contrary. It's just gonna move a little bit against you. Sometimes it's a sub hunt, sometimes it's just a little market test to see that where price can go, and then it pulls it to the other side and keep going to the other side. Look, you can see here, this is the open candle, right? Market went up, then it dropped down. There's a little bit shadow below VWAP. We don't consider this as an entry candle, neither this one. We need to let the candle get separated from the chart. This would be the best candle if anything could happen. Like if this one would come and touch, this would be the entry point actually, instantly. And then we let it ride to the upside. BA is also a winner. KRE. Okay, it's the ETF of ARCA. So what do we have here, son? So we have a 3 here, it gaps down. What do we have on VWAP? We have it open, it keeps hugging, separated, touch, and then you go down. There are two scenarios can happen here. It could be a break-even trade, or you can consider, I don't think it's a break-even trade, but it depends on how you play this thing, because when it opens with the stop of, come on boy, with the stop 24, $0.15 stop, and then it goes 31 cents. It's a 2-hour move. We can successfully take 1 hour out of it, obviously, and then even the worst case scenario, which would be taking this up, or is 1 full hour set. So this would be another 1 hour to take out of the market. Hold on a second. All right, sorry for AFK. So this was another one, and I'm not gonna go through outside bars. Reverse down, we see SQQQ, which is a inverted ETF for Qs, which means that when you buy this Qs, you are betting on Qs to go down. So if you don't have a big account, or for many reasons you prefer, it's not about the size of the account, actually I need to rectify this. If you prefer to hold something short, especially indexes, hold something short for a long period of time with an account that goes on margin, and if you don't need to have overnight margin and any sort of like this, it doesn't matter the size of the account, it's just about how you want to handle your situation. This ETF is a very good option to go with. It's right now, as I see that on 15-minute ETF shows that the situation is long. It means that Qs are short. There you go. So this is a very simple way to just manage your situation on with the ETFs and stuff. And this is just a point. So when it says SQQQ goes down, it means that we have a long, and if it says it's a long, it means that we're gonna have a short day. TZA as a reverse down, the signal was a like, look at this. As I said that I just a couple of minutes ago I explained about PMG, huh? Like PMG, this is PMG 1 2 3. This tomorrow, this is PMG. It has a potential of to down here. So like here's the PMG 1 2 1 2 3 1 2 3. Let me show another one. This one doesn't do much of PMG. It's okay. This itself is a full-fledged PMG. Look at that. There's just one. There are two of them with the higher highs. They're not all the way down. Is there two? These two, and this one. But this is just to open and then drop down. All right, TZA. Anyway, TZA continuation of the trend, long to the upside. So we're still hugging this crappy. In a crappy way. It just keep hugging the VWAP, and there is no trade out of this thing. Right, look at this until 10 a.m. After 10, even until 10, even 10 a.m. it keeps hugging VWAP. So there's no way to go after this trade. You know, there's nothing. There's no signal here. If this thing happened down here like this, yes, but the issue is that it happened on the second touch. Okay, this is the first touch. This is the second touch. I'm not gonna touch this thing. Reverse up. Apple. Let's take a look at Apple. Apple. So this is exactly what I'm talking about. Like it kept hugging, then separated, and then came in. It's not a good long because we are on a downside on Qs, and it has been a long weekend, so market is a little bit weak. It's a little bit choppy. Better to play on 15-minute. On 15-minute, we don't have any signal. Like it keeps hugging. What are you gonna do with this? AMD. It's a reverse up. All of them that are reverse up, but there's no up. It's just because of the freaking VWAP. So we have a signal here. Actually, we do have a signal, and it's here. Look, it kept hugging. Normally it gets to 10 a.m. it's still hugging. I'm out. I'm not going to pay attention to this thing, but it just lost it here, right? Yeah, it came back in with one shot. It went back in. So it's a good. It's a good thing. So stop down here. We go in, right? A little aggressive. What do we have? You can go down here, but we are in a very short area. It could just drop on us like heavy, but so we are not going to be aggressive about it. After it pulls back up, the stop is 33 cents and it goes 36 cents. So this is a break-even trade. Why? Because the rule, number one rule for trade management, so when we are in a trade, when it goes into the trade and we are in after 1 hour, a partial 10% and then set to positive, not just break even. I don't like break even. I just go like 5 cents, 6 cents into profit and then set break even and then let the rest ride. This one went above 1 hour and then pull back in. Obviously no question as right when this thing happens, I'm out. Like there's no question about it. It's just it's not, this is not, this won't do anything. IVM, IWM there. So IWM has a very interesting situation, and what is that situation? So let's look at it like in that way. IVM, when this is the open, this candle is the open, it opens and starts to play, goes up, doesn't leave. Look at that, 950, 10 broke, 10 came back in. Okay, this happened, we wait for a touch and then we want this thing to come back in. I'm not going to short this, all right? I'm not going to even touch this thing. One thing that we can consider here, let's look at the IWM on TradingView. Okay, we have a split. The scenario is very different on why the heck is so different? Okay, so what we are getting here, so IWM says it is it's short, right? We are considering this to short this thing. It means that it should have gone up then drop back down, but it didn't happen. So what we do instead, we are considering it goes down, it's supposed to go up, it's supposed to go up, this formation exactly contrary, like oops, there is a very interesting tool here in TradingView. I think it's in this one. There you go. You see this? You see this? This, I want it to be like this. Look at the blue line. There you go. It opens down here, goes up, does this, then drop back down, closes below. So when this thing happens, this is the best scenario to go in, right? So we go in down here, stop up here, even up here, no problem, HOD. So in case of market bounce off of VWAP, we are safe. Then it drops back down and then we go short. All right. So now what we have, this thing happens, it breaks. I don't like that it broke, but we could, if it wouldn't break, I would consider it's a very good signal. Anyhow, what we are getting off of, going short on this break, sorry, going short on this break, 44 cents of stop. Okay, 44 cents of stop, and it goes to 70. It's almost 2 hour. It didn't, so we can close at 1 hour. Yeah, there you go. It's on what, 44. Yeah, the moment that it pulls back, it's gonna close our trade. Then the second attempt is this one. How is this one? The second attempt is from here, the stop up here, 69 cents. Ooh, 69 cents. One drop like this one, if we go in down here, 63, or it was 69, sorry, is 63. Open of this candle 63, and then from here we just consider this as a stop at the highest point, and then we ride it. Once 151 to 76 is like almost 80 cents. No, it's not acceptable. It's 1 hour down here. Like here we have almost 3 or 2 hour and a half, and then goes back to 1 hour. No, it's not accepted. 2 hour and a half, 1 hour and a half, it would be around 80 cents. Down here we're gonna stop out. Yeah, there you go. It's insult though, because then instantly drops down. Anyhow, voila, this was the one that I want to take a look at. The list is so huge today. Let me show you. I just need to prepare a presentation for a very important meeting today, so I'm not going to stream and I'm not going to do anything else. Hold on. There you go. This is the list of today. Okay, we didn't check ours, we just check one of them, and we check up to here. The rest here. The rest I didn't check, and I'm not going to check. Let's check C and Neo for just for the glory of the. You want to see what I'm talking about? This is what I'm talking about. We have an inside candle, right? So market open, a strong push down. Okay, let's take a look at the TV trading view. Okay, look, this is what I'm talking about. It dropped, it pulled back, it didn't break, then it dropped down, right? So here it is. Here's the game. This candle is the candle of the a little bit higher, 21 cent, and then we have 37 cents. So obviously this is a break-even trade. You know what I'm talking about. It's like 10% plus that little. I mean, 10% of how many shares? Like how 500 shares? 10% 50 shares of 30 cents is $1.50. It's just the commissions, and then 5 cents into it. 5 cents into the trade. But then look again. It keeps dripping down, right? So with a little bit of flexibility, we could consider if it's even this one and just let it drive, let it go down. We could do one thing I'm working on. Look at the 15-minute. 15-minute. This is the wick that it took us. You're using a stop, right? We're using a stop. If we just consider that one, this level as our stop, and then this as our entry, and when we just respect that level until we get our to our TP, this would be a winning trade, right? But the thing is, unless it is 1 hour, unless it gets to good positive, because like here we are talking about almost 19 cents stop, right? Or 22 cents stop. If 22 cents, protecting that 22 cents becomes a tricky job. But if we don't touch it, we could have made so far the trade will still be open. The trade still will be open. 59 cents to 19 cents. Let's see how bro JPM is doing. Look at this. And then Neo. These are supposed to be up. These are supposed to be up. Here is Neo. Neo drop down, pull back in for a long, but I don't know. It's a reverse up though. Neo is considered to be reverse up. Let me close this. Is why I have 78%. I never want to see 78%. 50%. Just show me the 50% of the trend. Okay, so what do we have here? We have a continuation of short. Here we had 2, 1 in, 2 back in. So the idea is that this thing opens up and keeps going to the upside. So we have 2, 1, 2. All right. So to complete this formation, to fulfill this formation, we have this, and then we have in, so it could be a 2 or a 3 or even a 1. It really doesn't matter what. We have a candle, then we have in sidebar, so then we have x1, then we have this formation, which is a 2 down, and then expectation is this thing to rip to the other side of the motherboard, right? You see that, to the top of the motherboard. Now what do we have here? We have the baby bar, then we have the inside bar. This is the baby bar, inside bar, this is the motherboard. Then we have 1 in, we have a 2 down but green. Expectation is so this thing to go lower, to go higher, but it doesn't. Instead it drops lower. So on 5 minutes we are expecting long. It's happening here. We have a couple of entries that we can consider. So one ugly entry is this. We go in with the break of this one, 42 cents entry. Believe it or not, it's a 1 hour trade. It's a 1 hour trade. And then this is a break even. So we have this thing again. It bounced back. So we can go long again after it takes out this. It would be this entry. It will be 18 cent stop and 18 cent stop. Let's go again. 18 cent stop, and then it goes to, voila, the top is 46. So we go to 36 stop. There you go. Here in this candle we get out. Exactly, actually at the open we get out. It's a 1 hour off of the thing. So voila, here's what we have. So 2 entries here, and this is this will be the first touch, right? We are still hugging. I'm not gonna go in this because we are still hugging VWAP, but this is the first touch. So this is the first touch to go in. This is a candle that touches and pulls back to the upper side of this one, and this is a valid way to go in, breaking HOD and going to the upside. Actually, let me just check to see that what did we have from the stop perspective. Yeah, here we are a little bit short of. So here, this bounce is taking care of these 2 outs, these 2. This bounce shows that, so maybe even this would be 1 in, 50 to 23 cents stop. Yeah, this would be good. This would be a good in. A 26 cent, and then a 39. So this could be a 1 hour in a very meticulous and conservative way. In a very conservative way, you could consider this just as a 1 hour trade. Come here. Yeah, you could consider a 1 hour trade, and it would be 1 hour, and then the rest is just short. Here he will go be slaughtered. I don't know what happened here. Let's look at the SPY. And this happened. The value, you're still setting value. We will start to go, but came back in. All right. Normally when the gap is too big, I don't believe that this thing can happen. Like this one, the gap, if you consider the gap is too big, if I consider the gap is too big, I consider this as a long signal. So what's gonna happen on the open? I'm gonna go long, stop down here, $1.99, and then it goes $1.09 exactly as 1 hour to the upside. So how we can consider, how we can see a balance points, $1.12, and this would never become a losing trade. And the moment that this thing stops to form a shooting star at the top, 56 cents, less than 1 hour, but at least I'm protecting my gains, especially this one, because it's like what I'm saying. If this one goes higher, I'm in. If not, guess what? Tight stops. Always keep tight stops. The key to win this in this market is tight stops. Lots of 1 hours today. I am not a key. This means it's a choppy day. It means it's a choppy day. All right, I'm out. You have a good one. We had a couple of good trades today. I'm going to journal those that they had possibility, and I'm going to just you see the hold on. Okay, let me put this here. Charts. So here you can see that, voila, of course you cannot see. So on the, I know what to do. So here on the, hold on. You can see that that's ridiculous. I'm not able to restream OBS. Maybe I want to. Let me put it on main screen. I cannot. Anyway, so on the right side, you can see that there's a whole red space left. I'm thinking about getting some affiliation links, and all of the money coming off of the donations and affiliation goes directly to a GoFundMe account to support refugees and family of refugees. So we'll see how can I do that. Yeah. All right. You have a good one, and I see me later. Let me put this one on. Yeah. Okay. Let's see us later. Take care.